Welcome to the Market Enthusiast podcast, where Good Life's Noah Brooks, Chief Market Strategist, and Chris Needs, Senior Research Analyst, break down today's topics, covering their impact on the economy and personal finance in a fun, easy-to-understand way for investors of all levels.
Hey, welcome back to the Market Enthusiast. I'm Noah Brooks, and obviously, this is Chris Needs.
Hello.
Hello. So do you still have all your digits?
I have all my fingers. Survived the 250th.
Okay,
Yep.
good deal. Did you light off any fireworks?
Lit off a few. We had a few, as my son liked to call it, Nolan specials. We lit off the uncles and grandparents. They set some off at their house, so we had a good time.
Anything big or just the little guys?
There were some pretty good ones. I'm surprised at how powerful they allow fireworks to be at this point. I remember as a kid, you had to go to like Ohio or West Virginia to get the good ones.
Yeah, you can buy them here in Pennsylvania now.
And now I'm like, I don't know. They don't go as high, but I feel like the explosions are just as big, so they happen way closer to you when you're buying them yourselves.
Yeah.
And it's just like my uncle was saying I'm down in the lower part of his yard. We were sitting up on like his patio, which is above there, and I feel like they're going off like right in front of our face, and they were big ones too. So hey, good show.
Yeah, our neighbor Bo does a massive, I mean, this guy spends some buku bucks in a neighborhood, and we had about maybe 65 people that joined him. There was a picnic beforehand. We have this new dog. Shout out to Bernie, Bernadoodle.
Bernie.
We have this new dog, so he's only, like 10 weeks old. So he was at the picnic and he was getting along, and we didn't know what to do with him for the fireworks. Ailish was like, screw it, bring him, he'll be fine. Last dog.
Was he fine?
Well, as soon as they started going off, I was holding him. As soon as they started going off, he started freaking out. So I kind of ran, and we were in front of this guy, Sean's house, and he ran up with me. He let me in his house. And so we sat in the front area of his
then
house.
Bernie peed in his house.
Well,
did he really?
Yeah, I mean, he's a
10-week-old
dog, so of course he did.
No good deed.
Yeah, right.
Thanks, Sean.
Exactly. I know. A big shout out to Sean and Cheryl. Thank you so much. So here we are. Mid-year. We obviously we talked about it last time. We had a great first half of the year. We're down just a little bit since we came in July 2nd. Market's up about 10.5%. Nasdaq's up 13. Mid caps up 15. Small caps are up over 21. Developed international up around 6, and emerging markets up 20%. So all in all, man, this is really shaping up. At least the first half of the year has been phenomenal, and the second half, there's a lot of opportunities out there. In terms of value and growth, value is the big winner this year, up almost 19%. And even though technology is up maybe 27-ish, growth, the entire growth index is really only up less than 5% for the year. Values and dividends are just trouncing growth at the moment.
Yeah, Lag 7 aren't really doing anything right now year to date. It's been mostly the other 493 really pulling their fair share finally, and that's a good thing for the market. That's rotation that is healthy. We're talking about how much the hyperscalers have invested, and it's been a ton of money. A couple of them have gone free cash flow negative.
Yeah,
Oracle. They're maybe not in the Mag 7, but they're a hyperscaler, and all that money, all that CapEx investment is going right to the semiconductor companies, which aren't all, it's not just NVIDIA, there's AMD, there's Broadcom, all the majors out there. And then you get down, downstream, all the component companies that are getting really good valuations. Memory, obviously everyone knows the story there and what's going on with the South Korean stock market with SK Hynix and Samsung and the crazy returns they're getting. They're technically an emerging market. I don't think of South Korea's emerging market, but they are in MSCI's indexing.
It depends on which emerging market provider.
Exactly.
Right.
Yeah.
So some of them have South Korea as developed. Some of them have, as you just pointed out, MSIC has it as emerging. I don't really think of it as an emerging economy.
Yeah, nor do I. I mean, you look at the cities there, it's like, holy cow, that's beautiful.
Well,
but to point, hey, we just had SK Hynix have the largest ever foreign listing here in the United States, raised over $26 billion.
Yeah.
As
And
they're super volatile right now with every it's up 10%, down 10% every other day, depending on what memory he's doing.
Yeah. Well, last time I checked, the South Korean Kospi index, I think it is, was up close to like 90% for the year. And, you know, depending on which index provider you are using, you either have a little bit of South Korea or a lot of bit of South Korea. And so it really makes a big determination on your emerging markets this year. But to your point earlier that we were talking about, you know, EM has a lot of technology as earnings weighted.
Yeah. At the estimated earnings this year coming from tech companies on the emerging markets MSCI indexing, 83% coming from tech companies. That's wild. You know, I think normally we would say, a high exposure to tech companies is generally a developed market thing. And the US, we have all the hyperscalers, best tech companies in the world. And ours is only 52%. And we know their earnings have been exceptional.
Yeah.
But yeah, so from that perspective, we're way less weighted to tech compared to emerging markets. And then if you go to Europe, if you're going off the stock 600, only 6% is coming from tech earnings growth.
So by that data point, you would think if there's a tech slowdown or earnings slowdown in semis and chips, that the place to be may be Europe.
Yeah, I mean, that's where you're going to get your diversification benefits from. If you have clients or if you're a money allocator and you say, all right, there's something funny going on under the surface here. Maybe a certain company's reporting poorly, and you say, I don't want that AI exposure, but I have to stay in the market for my client who wants a 60-40 portfolio. You would probably be looking to move to more of a Europe centric fund where they have much less tech, much less growth, and they're more of a value centric area.
Yeah. It seems interesting that Europe, and I consider them to be fully developed, right? As obviously all the index providers do. And, they have such a low weighting to technology. And of course, they do have a few big tech companies like ASML and certainly a lot of defense contractors which verge on technology. But their regulatory institutions are such that they just have this stranglehold on competition. They want everybody to be fair, and they don't really have the big tech weighting in their indexes that we do.
Mm-hmm.
And it kind of goes, obviously technology has been on fire for the last 10 or 15 years, really. Since the beginning of 2013, technology has been the place to be. And you think to yourself, Europe has a lot of opportunities. They have a lot of smart people. Why are they so behind on the technology allocation and technology companies? It just seems like it's regulations.
Yeah,
Health and safety.
The brightest brains seem to go to areas where they're appreciated. So Silicon Valley, over the years, a lot of the amazing founders have essentially gotten to that area, for better or for worse. California certainly loved that tax wise, but they just really have not stuck in and gone through the entire process in Europe. And it seems like it's a regulatory issue that has led to that. But, with the amount of regulation they have, you would think there would have been some local outperformers that stuck around. We think of like maybe the old traditional ones, SAP, maybe,
sure.
Names like that. ASML, kind of like a fabricator of chips, right? Semiconductor company. But that's kind of an industrial. That's not a true tech company, asset light.
Don't forget Nokia.
Oh, yeah. There we go. How can I forget them?
They were a thing a long time ago.
They were.
I mean, they were
lost their moat pretty quickly.
Oh, yeah. I remember the old Nokia flip phones back in the day and the little guys. I mean, they at that time they were getting smaller and smaller and smaller, and now we're going the opposite direction. So I don't know if Nokia is. I don't know. Do they still make phones? You ever see anybody with a Nokia phone?
Not lately.
Not lately, huh? Not lately. No. But to your point about the earnings, we looked at earnings for the first quarter, and obviously they were blowout earnings, up almost 30%. I think it was 28.7% earnings growth. At the beginning of the year, or the end of last year, the expectation was really like mid double digits, 13, 14%, and trounced those numbers, doubled that.
Mm-hmm.
And now we're looking at, we were not really in earnings season yet, although it's going to be starting here. We had some big banks report this week. They've done phenomenal. JP Morgan had some blowout numbers. A little bit of question going forward if they're going to be able to maintain that. But the earnings that they've actually announced have been really good. Expectations are for about 25% earnings growth, quarter over quarter. And you just think to yourself, how much longer can you have those 20% earnings growth? And how is the market going to react when it's not 20 or 25? And, in the technology case, it's 30, 40, 50, 60, 70% earnings growth. And it goes back for me, I think about back in the day in the 2000s, where you having eventually they stopped beating estimates.
Mm-hmm.
Right. The estimates kept raising and raising and raising. And so now, even if you get 25 or 35% earnings growth, if the expectation was for 40, well, that stock's going to get murdered.
Yeah.
We saw yesterday IBM. Now they didn't beat expectations. They came in lower than expected. And they essentially said that the CapEx spending has moved away from software into the hardware side. And we see that with the names like SanDisk and Micron.
You don't need consultants when the technology can do it for you.
Yeah, right. Interesting.
Yeah.
So earnings going forward, I feel like we're a little bit at a crossroads where if expectations continue to be really high, at some point, I don't know that companies are going to be able to maintain those beats.
Yeah. Yeah. Earnings going parabolic, it seems. Profit margins going parabolic, essentially, not going truly parabolic, but you look on a chart, it's curving upwards.
Yeah.
And, that's a function of several things. A lot of money going to these super high margin semiconductor and semi-related companies. But in the end, eventually it has to slow down, right? And we have to be aware of that. We have to look for where peak earnings could be. I don't think it's this quarter or next quarter, but like you said, when your year-over-year comp is 40% and you're getting, a P valuation over 100, yeah, you've got to perform. You've got to continue to show there's growth there, or else the market will start to pull dollars from you and allocate elsewhere, bringing down your PE. And, whether, I'm interested to see in the next 2-5 years to see how much productivity can be maintained and boosted, because I don't think we're anywhere near AI truly affecting across the board productivity, but the potential is there. And if we could truly be in a different regime for profit margin levels, like we've sort of been the last couple quarters, that'd be really interesting to see overall valuations where you should get multiple expansion when you're going to a different regime of higher profit margins.
Yeah. You speaking of PE and expansion, right now the current PE on the S&P 500 is about 22.5, which is a little elevated. Next year's, the full year 2027 is less than 19.
Thanks to earnings.
Earnings, right?
Yeah.
And so I think the market continues to be positive and making progress unless somehow earnings, do not materialize to those expectations. And going back to the internet bubble, that's really what killed the internet bubble. It was at some point, it was like, wow, these companies aren't really making that much money. And yeah, they're going to be the wave of the future, but we need earnings now.
Yeah. We're talking about how those super high profit margin semiconductor and semi-related companies have taken all that free cash flow from the hyperscalers who are trending towards free cash flow negative. That can't go on forever. They can't infinitely go free cash flow negative. The market wouldn't allow that. Eventually an Oracle or some other name would get punished so bad, being so free cash flow negative, that no, the winners start getting impacted by it. And like you said, that's how you end up with a bust scenario.
Yeah. And some of that has to do with interest rates, right? They've been relatively stable this year in general, even though we had rates spike up a little bit during the Iran war. Hey, is that still going on?
Yep.
I kid, right? Obviously, we know over the last 6 or 7
weeks,
days,
yeah.
a few weeks or so, we're kind of back at it with Iran. The memorandum of understanding seems to be being a little bit interpreted.
Yeah. Apparently, there's wiggle room there on both sides, right? Yeah, it's unfortunate because we just got a really awesome CPI number. It's like they waited until right after the month end, so to take a little pressure off the Fed a little bit with the new chairman in there.
Yeah, well, oil prices were trending down. Obviously,
Came down pretty quick. Surprisingly, normally they take longer to come down.
They were well over $100 a barrel. When the conflict started, and as of last week, I think on Monday or Tuesday, they were at 70, sitting at 84 when we walked into here today. Friday and Monday, oil was up pretty big, up a little bit yesterday. And so some of the wholesale inflation numbers that we got today were really good.
Mm-hmm.
But I think that they were impacted by, falling energy prices across the board. We got CPI yesterday, which was actually very good as well. Even when you strip out energy and volatile food, the numbers were really outstanding. We got essentially flat month over month. 3.6 was the headline number. When you strip out and go to the core, strip out food and energy, it was 2.6, which is a lot closer to the Fed's preferred number of 2, even though we haven't seen that for a long, long time, really since COVID. But things seem to be moving in the right direction from an inflationary standpoint. Now, as you pointed out earlier today, it was kind of just a reversal of the May's number, which is a little bit higher than expectations. So I think obviously time will tell, and all of these data points, they're
good. Time sensitive,
yeah.
Just because they're just spots on a calendar where they begin and stop. So,
yeah. But
take it with a grain of salt both ways,
right? So if May was high and June was lower than expected, you could average those out and say it's not really moving that much.
Mm-hmm.
And again, with these data points, what I was going to try to say was like, it's only good for about an hour or two, and then it's okay. Well, what's next month going to look like?
As of 2 days ago, chances for a July Fed hike, which we don't think is going to happen, was up to like 40%. Now, I wish, if I would play in those prediction markets, I would have put a lot of money on no, rates are not going to be hiked in July and made the 60 cents or whatever they do on those things. But now they went all the way down to, as of yesterday, I didn't check today, it was down to like a 5% chance or below 10% chance on the FOMC, the Fed Watch tool.
Yeah, for next month.
Yeah. For this month,
for July. One of those things that has come down in price, I mean, genuinely come down in price, not that the increase in prices slowed, are egg prices.
Mm-hmm.
Have you noticed that?
I did, because you know what? My pregnant wife is now addicted to dippy eggs.
Okay.
So she's making them and she's like, wow, that was the best meal ever. I'm like, it's eggs. It's just eggs flipped over.
You like what you like.
Okay. Yeah. No, I love dippy eggs. I'm not a scrambled egg guy. She normally is. So I just don't eat breakfast because she wasn't good at making them. Sorry, Alexa. She wasn't good at making them. I would have to make them myself. And I'm always running crazy in the morning. Between playing basketball, showering, running off to work, I don't stop much.
I gotcha. So one of I guess everybody's talking about it, right? The Department of Justice had an inquiry, and they actually came to a settlement with a group of traders and egg producers. And they they came to a settlement that the prices were being manipulated.
Collusion.
Yeah, a little bit of collusion, kind of like the memory markets in the 90s and early 2000s. But so when you look at it, one of the things that happened was the bird flu. And over a period of time, I think it was about 18 months, they had to kill roughly 200 million hens. And so there's no question that the bird flu, the avian flu, had a big portion of driving up those prices.
But whether you go from 1.5 per dozen to 8 a dozen is a whole nother story.
Well, I
think that they didn't come down after numbers recovered a little bit. I don't know what the growth time is, maybe 6 months, 9 months.
I know that they're down dramatically. How much did you pay for 18?
I thought it was $1.59. Now I may not have been looking at the right
I don't know what
sticker
store,
or not.
I don't know what store you're shopping at. I haven't seen $1.59 on eggs in a long time. Although I do buy the foofy eggs.
I don't check the receipts, so I might have had the wrong sticker. I was like, $1.59 for 18. Okay.
But so they did come to an agreement, a settlement with some traders and some egg producers. And the price has been essentially dropping for a long time since that DOJ inquiry has happened.
Mm-hmm.
So when you take core CPI, which I don't know how many eggs are consumed in the United States, but the price is coming down.
Now.
It's one of those things that does impact grocery costs, right? I mean, we know it because they got so high and everybody was complaining about it. I don't hear anybody cheering that they're really cheap, but at the same time, it does have an impact, just like energy.
I'm a big chicken cutlet guy. You got to use eggs to get every flour and the breading on there.
Yeah, I know. Absolutely. So inflation is moderating. And I think that's really, really good for the overall market, certainly for the economy and the consumer. The consumer is not necessarily in a great way. And there might be a little bit of a disconnect because everybody feels like prices are continuing to go up when they're actually moderating a little bit. And you see that in the consumer sentiment numbers. Consumer sentiment is one of the lowest points that it's been in the last 10 years, really since COVID. And the global financial crisis. It's a big disconnect between consumer sentiment and what's going on in the rest of the world. And to your point about, you didn't say death scrolling, but you said just negative news. I mean, people are out there death scrolling, right?
Yeah. Algorithms are feeding you whatever draws the reaction, draws your eye, and keeps you flipping through there.
Yeah.
So yeah, if you're getting the most emotionally charged stuff, keeping you on there, you're going to be more negative.
Yeah. If you're looking at politics these days, and I'm not going to go into a big diatribe on this, but if you're looking at politics, you're probably one of those people that thinks the end of the world is coming down, is right around the corner. You think about like Social Security. Oh my God, everybody's going to run out of Social Security. Oh, that reminds me, there was a bipartisan bill put forward to have an evaluation of Social Security. Social Security is not in great shape. I think everybody knows it from their death scrolling, right? But the Social Security Trust Fund is actually scheduled to run out of money. And don't confuse that with stop paying benefits. But it's scheduled to run out of money in, I think,
2034?
2032.
2032 now. Well, great.
They brought it in. But what happens at that point, if Social Security actually does run out of money, it's not that benefits stop, it's that benefits would get reduced. And I think they would be reduced to about 83% of what's going on. Now, I can assure you that whoever's in charge in 2032 when this happens is not going to like the impact from the voters. And so there's this bipartisan commission right now that is taking a look at it. I think they're calling it the Promise Act, protecting retirement opportunities and maintaining income, something like that. Because realistically, it's 6 years away until it runs out of money, and whoever's in is going to get voted out. I don't care if it's midterms or general; they are going to get voted out, and so it really needs to be looked at. And I guess this goes without saying, but I don't know that anybody can count on Social Security, especially the younger generation, your generation. I'm obviously a little bit older than you, but I don't know. When you think about Social Security, do you think that it's going to be there in what they're telling you it's going to be there when you retire?
I'm hoping for this universal basic income that you've talked about, because I don't think Social Security is going to be there at all. I would not, into my own financial plan, I'm not putting Social Security in there. So I'm not retiring for another 30 years. So I'm not counting on anything from that. Now, this whole thing, we've talked before, and short, like, I don't expect anyone in here to remember or have been listening when we say it, but it's like they've screwed it from the beginning. You can only invest in treasuries in the trust. And it's like, come on, how are you supposed to grow? You're investing for 30 or 40 years of someone's working life, and you have them in fixed income from the beginning, not just fixed income, one single government's debt. Just it was cursed from the beginning. Maybe it was a way to fund the government, and that was a secret little Trojan horse they did in there to make sure they always had flows. I don't know. But it reminds me of something that just happened, and I got all charged up. Our school district raised our taxes, and they forecasted for the next 10 years are going to raise taxes at the max allowable by law. And it's just like, why is that necessary? Oh, they need a new roof and new HVAC. Well, yeah, when you, if and most schools can only invest in mostly 90-95% or more fixed income, similar to Social Security. Well, that means, a roof is going to go bad in 30 or 40 years. It means you have to start saving $20,000 a year from day one, and keep doing that every single year, because you're not going to get a huge appreciation on those assets. And you can't just suddenly fund a roof in 1 year's amount when you still have operating expenses. It's the same thing with Social Security. It's too late to fix it, unfortunately.
Well, I don't know that it's too late to fix it. I mean, it's going to require some major changes, and maybe that is.
It could have been in much better shape if they actually ran it appropriately from the beginning, or even 30 years ago made the changes necessary.
Yeah. I mean, the last time we had any major change in Social Security, I think, was 1983. Right, where they raised retirement age from 65 to 67, increased the payroll taxes, and that obviously was a long time ago. And something needs to happen now. A lot of people do depend on Social Security. I don't know what the stat is on how many people only have Social Security. I'm sure there's a significant number of retirees out there. But the bottom line is, I don't know that people can think about it as in absolute terms as something that's always going to be there. If they do nothing, which we know tends to be the MO for our elected officials, at least it seems like recently. If they do nothing, it's going to drop. And eventually it's going to go down and down and down. I don't know if it gets to 50% of what the number is, but they're going to have to raise retirement age. They're going to have to raise the payroll tax. They're going to have to raise the income limits on what Social Security is pegged to, or the upper end is pegged to. And I mean, it really needs a fix. But you know what they have been working on?
What?
Daylight savings time.
Yeah, that's where I thought you were going to go. Bipartisan bill. What could be of utmost importance? Daylight savings time. That's where I thought you were going to go with that. I just wish, we've already got stakes in Intel and whatever. OpenAI wants the government to take a 5% stake in all these things. Let's just make it 50-50 equities, U.S. equities, S&P 500, Russell 1000, whatever, and 50% fixed income. Because you know what? I looked at a chart, and it shows for real purchasing power, your chances in cash, money market, fixed income over time, and you 100% of the time, you creep towards 100% of the time underperform versus real purchasing power when you're in only fixed income. 60-40 is actually the quickest to get to 0% underperformance, quickly followed by 100% equities.
Yeah.
So should have been done decades ago, and we already have stakes in companies now. Why don't we just have the Social Security Trust manage some allocation of 50-50, 60-40, 40-60% U.S. equities, keep it at home here because it's funding our retirements essentially, and U.S. treasuries?
I mean, I'm not opposed to the idea. I think one of the reasons why that hasn't...
With no voting power in the Social Security Trust.
I think one of the reasons that hasn't happened is because no one wants to be in charge when the market goes down, right? I mean, you think about March of 2009, market from top to bottom, I think was 57%. And then you're looking at the math. And now with investors and investor psychology, the worst thing you could possibly do, especially with an index, is sell at the bottom. And I would take that binary bet that politicians would get out of the market right at the very worst time. So I suspect that that's why they haven't done it. But
come on, there's a few politicians who are really good at timing trades.
Oh boy,
really good.
Which ones?
Oh, I don't know.
So moving on from that one. Yeah, I mean, something needs to be done. And one of the things that you could do would be invested differently. And maybe it's not even in equities, although, 10% in the S&P 500 would probably do a world of difference to those numbers when they got down to zero in the trust fund. But you might be able to buy corporate bonds. You might be able to buy, hey, we should talk about private equity and Social Security, right?
Oh boy.
Maybe a little Bitcoin.
Too soon.
Bitcoin's back up to around 65.
Yeah. Great.
The crypto guys would love it if the Social Security started buying Bitcoin.
They would. I bet you some people thought Trump was going to do that with how he was talking originally. But since we're talking about politicians here, unfortunately, Lindsey Graham did just pass, coincidentally, kind of strange, basically as soon as he got back from abroad visiting Ukraine. He's always been a war hawk. But yeah, interesting. All the different ways people can be poisoned and whatnot, delayed things. I don't know. Very interesting to see. And then obviously we know Mitch McConnell's been hospitalized for a while.
The turtle, yeah. He's been MIA. And what
rumors about him.
Right. But what happened with him? His wife
was she
transportation secretary.
I thought it was like of labor or something. She hightailed it out to China while he was in the hospital, and she said the senator's health does not warrant me to be there. I'm like, what? What lady leaves her husband in the hospital bed? He's just sitting in there alone all day, every day.
I'm sure he had visitors.
I'm sure he did too. Scott Jennings had a nice 17-minute call with him, apparently. From seeing that. But yeah, just very interesting to see.
There was another guy, a U.S. representative from New Jersey, Tom Keene, who disappeared for, I think, 3 or 4 months. 3 or 4 months. He missed 100 votes. He came back. He said he was diagnosed, I guess, with clinical depression. And apparently he's back now. But it raises a bigger question for our elected officials is, should they have to disclose major health issues? Mm-hmm. Here in Pennsylvania, our senator, John Fetterman, the guy who only wears shorts, a little bit strange. Today you could wear shorts, but in the winter, I don't know. That seems a little bit
Uncle
odd.
Fester. He
had a stroke while he was running for Senate here in Pennsylvania. He still managed to win. I don't think he's 100% back. I don't know if he was ever 100% here. But yeah, I mean, it really raises a bigger question is, two things. One, should elected officials have to disclose major health problems? Where do you draw the line on, HIPAA violations, stuff like that? And then when you look at the average age of our elected officials, especially in the Senate, and, the last few years in the White House, that to me is a little bit scary. Mm-hmm. I mean, we have mandatory stop flying for commercial pilots. It used to be 60. I believe it's now 65. But Mitch McConnell is 84, Lindsey Graham 71, which doesn't seem that old to me. But there are people well into their 90s that are voting for us, as our proxies.
I don't think we need to get to the level of HIPAA violations, but there has to be a constant bipartisan committee there of maybe even of doctors, not even, a committee, maybe someone overseeing the doctors saying yeah, Mitch McConnell, he's been he's gone for last 3 years ever since he had that on air thing where he just paused. Right? Yeah, he just paused. There has to be something because you can't have a POA or there was the auto pen thing in the last administration. It's you can't have other people making decisions when the person obviously who should have that power was voted upon. So, the POA thing or people making decisions in lieu of them being healthy is the concerning part that I can't come along with.
So what you're saying essentially is that we should cap senators at age 70.
Yeah, even lower. I don't know.
How about some term limits out there too? Huh?
Yeah, would love it.
I'm okay with that. I think the president should get 2 5-year terms, and I think senators should get 3 4-year terms. And I think every 2 years for the House of Representatives is crazy because they go from winning an election and the next day they're fundraising because they know in another 18 months there's another primary. Something's got to give. I don't think you and I are going to solve it here today, but definitely something's got to give. So that's my story, and I'm sticking to it.
To your point about age, we should have age limits as well. It's like, not to be ageist, but what happened with Biden is exactly why you would.
Why? What happened with Biden?
Just totally started glitching out mid race with months left, and then Kamala ascended him after the fact. Well, a lot of people are saying, well, I wouldn't have voted for her. I would have voted for X and X. Yeah. So it's just like the frequency of things that can happen past a certain age and how the Democrat process works, I feel like there's too many things that can go wrong when you have a bunch of Trump's 80 now. Like, just too many things can go wrong. There has to be common sense limits.
No question about it. Who's going to introduce those limits? The old people?
Yeah. The people voting themselves. Yeah.
Yeah. Okay. So moving on, one of the things, that our senior citizens may not be able to wrap their head around is technology. I'm not saying that I do. I am not a technocrat. I think I understand it as good as anything, but in the field of energy, there's been a few breakthroughs around fusion.
Isn't fusion like what happens inside the sun? How are they recreating that?
Well, right. So the two ways that we've been generating energy besides solar is burning something or splitting atoms, right? So regular nuclear reactors split atoms. Fusion works a little bit differently, and I am not I'm not an expert on it, but it works a little bit differently. Basically, it's smashing atoms together. And Germany just used one or two of their decommissioned nuclear power plants to start what would be the first fusion reactor. I don't. It's definitely not producing any energy at the moment, but they're putting a few $1 billion or euros into it, and it's one of these things that could really be a game changer if they're able to come to it. This week was one of
if this melts down, we just go into a black hole, so no biggie.
Yeah, I mean, you don't have to worry about dying from it because you're instantly poofed, I guess. Not 100% sure. That was the fears with the Large Hadron Collider, right?
CERN,
yeah. Right? I mean, they thought that, if they ran that and it hit two atoms together at light speed, we could go into black hole as long as, well, we're not in a black hole right now, right?
Who knows? The multiverse.
We're not in a parallel dimension, but there was another fusion company. I think it's called General Fusion. Great name, guys. That just came public in the last few days, backed by, you guessed it, Jeff Bezos from Amazon fame. And it's interesting. I mean, it could be one of these things that, and I'm not expecting in a few years, but 10, 15, 20 years from now, I mean, it could be a major disruptor in the world of energy. Think about a horse and buggy and the car coming along. If we don't have to pump up dinosaur bones from the 10,000 feet down and put them in a furnace and burn it to power turbines, we could smash atoms just like the stars, right? The sun, and all those businesses would be, what is it called? Out of business.
Yeah.
Right. So interesting stuff.
You want to burn coal?
Hey, they're still cleaning that coal.
Yeah.
I bet it's really clean by now. Absolutely.
Beautiful, clean coal.
Beautiful, clean coal. So that's what I have for this week. The fusion, I think, is probably the biggest game changer that's coming down the pipeline. Quantum computing, obviously, big thing coming, but we're not there yet. And we're certainly not there on fusion, but it's going to be a game changer, Chris. I can feel it.
I agree.
I can feel it.
I agree.
What else do we have?
I think just my closing thoughts are we've had a really stable growth environment in terms of earnings, and would be nice if we could stop, getting into scuffles with Iran, and we could get inflation down and oil down. We could maybe get some rate cuts priced in for 2027 again, because you know what? We'd start getting some multiple expansion again. We'd love some better, even higher price earnings multiples. And that's what I'm hoping for.
There you go. I don't know that I want higher PEs.
Well,
just
that's
say,
just a natural reaction of multiple expansion and the profit margins being so high. I think earnings have done the work so far this year. Let's get some help from the other side of the equation.
I'd like to see the market rally on better earnings and that they're so good that PEs drop.
Wow. Like we've been the last 6 months or so.
Yeah, absolutely. All right, everybody. Thank you so much for listening. We'll catch you next time on the Market Enthusiast.
The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly.